The $1 million retirement myth. Why this magic number could leave you broke in retirement. Remember when being a millionaire meant you were set for life? Well, I'm Erik Bowman, and after helping hundreds of retirees navigate their financial futures, I can tell you that the math has changed dramatically. Today, I'm going to show you why $1 million might not be the retirement safety net you think it is, and more importantly, what you can do about it. These aren't just theoretical concepts. These are real calculations we use with our clients every day. So if you're counting on that $1 million nest egg for a comfortable retirement, stick around. Number one, the $1 million reality check. Let's start with a simple but shocking calculation. If you have $1 million and you need $100,000 per year for expenses, and let's ignore taxes for a moment, your money will be gone in just 10 years, even if you're only 65 when you retire. But it gets worse. Once we factor in taxes, assuming maybe a 30% effective tax rate, federal and state combined, that $1 million suddenly becomes $700,000 after taxes. Now you're looking at running out of money in just 7 years. This isn't meant to scare you, it's meant to wake you up to the new retirement reality. The truth is, $1 million isn't what it used to be, and there are several crucial factors we need to consider. The monthly expense reality. Here's where the rubber meets the road. Your monthly expenses determine whether $1 million is enough, not the other way around. Let's break this down. If your monthly expenses are $3,000 to $5,000, let's say $36,000 to $60,000 a year, $1 million might be sufficient, especially when you take into account Social Security and maybe even pensions. But if you're spending $15,000 per month, $1 million won't come close to supporting your lifestyle. The key is to understanding that retirement planning isn't about hitting some magic number. It's about having enough to support your specific lifestyle needs. Consider the tax trap. One of the biggest mistakes people make when planning for retirement is forgetting about taxes. Here's a reality check. The government wants their share, and it's probably bigger than you think. Remember that 30% effective tax rate we mentioned? That means for every $100,000 you withdraw from your traditional retirement account, you're going to end up getting about $70,000 into your checking account. This dramatically impacts how long your money will last. But it gets even trickier. High withdrawals can push you into higher tax brackets, and there's something called stealth taxes that most people never see coming. And don't forget about the Medicare surprise. Here's something that catches many retirees off guard. Your retirement withdrawals can actually increase your Medicare premiums, called IRMAA. We don't like IRMAA. It works like this. The government looks at your modified adjusted gross income, your MAGI, to determine your Medicare premiums. The higher your MAGI, the more you may have to pay for your Medicare premium Part B and Part D. So not only are you paying taxes on your withdrawals, but you might also be triggering higher Medicare premiums, a double whammy that can significantly impact how long your $1 million will last. The lifestyle factor. Here's an interesting observation from my years of working with retirees. Often those with more modest nest eggs make their money last longer than those with larger savings. Why? Because people who've lived modestly throughout their working years typically continue those habits in retirement. But high earners who've grown accustomed to a certain lifestyle based on their cash flow often struggle to adjust their spending in retirement. This is why the enough number is different for everyone. $1 million may be plenty for someone used to living on $50,000, $60,000, $70,000 a year, but it could be woefully inadequate for someone accustomed to spending $200,000 annually. The universal truth. Here's something that might surprise you. In all my years as a financial advisor, I have never had a single client tell me they saved too much for retirement. Not one. In fact, the opposite is true. Almost everyone wishes they had saved more. This tells us something crucial about retirement planning. When in doubt, save more. This means maximizing your 401k contributions. You might want to listen to the video I created talking about the new changes that will allow you to save even more. Taking advantage of catch-up contributions if you're over 50 and the super catch-up contribution in 2025. Considering Roth IRA conversions for tax diversity. Building up non-retirement savings for more tax diversity. Creating multiple income streams for retirement, perhaps a pension, rental income, Social Security, or even part-time work. So is $1 million enough to retire comfortably anymore? The answer is it depends on your lifestyle, your tax situation, and other income sources. But for many people, especially those who want to maintain their pre-retirement lifestyle, the answer is probably no. The good news is it's never too late to improve your retirement readiness. Whether you have $100,000 or $1 million saved, there are always strategies to make your money work harder and last longer. Here are 3 action steps you can take today. Calculate your true monthly expenses, understand your potential tax situation in retirement, and create a full plan, saving money starting immediately. If you found this information helpful, be sure to like this video and subscribe to my channel for more retirement planning insights. If you're ready to get a personalized analysis of your retirement readiness, I invite you to book a call with me and my team. The link is in the description below.